Hello everyone, this is Shivasagar. Today's topic is one infesting topic for Indian economy. So that is about non-performing assets which is affecting our banking sector drastically, and of course the two issues alongside with NPA, there is one more issue, that is twin balance sheet. Twin balance sheet. This video I'll walk you through what is twin balance sheet issue as well as NPA and its types, and what are the causes and impacts that have dented the Indian economy and infested the entire economy badly, and also I am going to talk about the solutions which government of India has come up with. See, when it comes to TBS, that is a twin balance sheet approach, okay. So what is being shown here is, so twin balance sheet shows about the balance sheet of two things. One is bank, the other one is companies, or you can call it as corporate sector, okay. So basically NPA means that is a bad loan in which a loan is not serviced for 90 days or more, okay. So here NPA happens for banks, but on the other side you have bankruptcy that is happening for what is that, companies or corporates. You can see that companies are unable to repay loans due to weak profits or delay in project. There are various causes as to why companies are not giving back the loans at the time, at the correct time, at the timeline. They are not maintaining it, and due to that their balance sheet is supposed to be called as over leveraged balance sheet, because their business is not remunerative. They have weaker profits, internal rate of returns, and ultimately resulting in reinvestment being less, and reduced investment will ultimately reduce the production. And of course banks who are lending the loans are also suffering, because after 90 days that loans are considered as non-performing assets, because assets should be a resource that the bank owns and it should be yielding a lot, okay. Here, despite of bank giving loans, there are certain reasons by which banks assets are converting into non-performing assets, okay. So reduced lending because of NPA will ultimately lead to loss of the assets. The economic value of assets will be lost, and there will be credit crunch prevailing in the economy and also in the banking sector, okay. So when it comes to NPA, you have already said, if a loan is not serviced for 90 days, it is called 90 days and more, it is called NPA. But the actual meaning is non-performing assets refers to a loan advances where the borrower fails to pay or repay principal or interest for 90 days and more, and ultimately it indicates that asset is no longer generating income because it is not yielding income, it has lost its economic value. And high NPAs reflect, it actually talks about banks' poor asset quality and financial stress in the banking sector, okay. So this is what happens. You can see this picture ironically depicting banks being not able to recover the loans, ultimately considering the assets as non-performing ones, resulting in hampering the progress of the banks and credit availability for the banks to actually lend loans to other borrowers, okay. See, you can see that bank loans assets or NPAs, how the concept evolves, okay. Typically bank has two kinds of assets. One is standard asset, the other one is stress assets, okay. Standard assets in the sense there are one type, okay. So regular borrowers who actually do not maintain any kind of delay, okay, the delay is nil delay, and other than that you can call their loans as standard assets. They are healthy loans, okay, they are always healthy loans. And other than this regular nil delay or standard assets which are healthy, you have three kinds of accounts, okay. Mostly it is two kinds of account, just to be conformed with a third one, I'll also equate this to third, okay. So here three kinds of accounts are mentioned. Special mention account, okay. Special mention accounts are of three types. Mostly it is called as two types, okay. So special SMA 0, that is from 1 to 30 days. If the loan is not being repaid or serviced, it is for 1 to 30 days, that is called as SMA 0. If it is prolonging to 31 to 60 days, that is called SMA 1. If it prolongs up until 90 days, it can also be called as SMA 2. Okay. So you can call it as SMA 2, but it is not compulsory that you write it SMA 2, because stress assets falls with the definition of NPA. NPA means if a loan is not repaid or serviced for 90 days or more than that. Okay. Since we talk about less than or 90 days, since it is touching 90 days, we will right away conclude that as NPA. Okay. So NPA might be prolonging for might be starting from 90 days or more than 90 days. Substandard assets are lesser than or equal to 12 months, where the loans or the borrower is not servicing the debt, and ultimately it is leading to a substandard assets, and it is also a stress assets which bank feels problematic with. Okay. So 12 months, equal to 12 months and lesser than 12 months. It is also called as substandard assets. And doubtful assets, if the borrower has not paid the money for more than 12 months, that is called as doubtful assets. It is doubtful that borrower is going to pay back the money. Okay. So this happens, or service the debt with interest rate. Okay. It could be both interest rate and principal amount that he is supposed to pay. He or an individual company, firms or any kind of institution is supposed to pay here. And loss assets, in the sense these are some unrecoverable assets. Okay. We feel that this NPA will not be recovered despite of several attempts that a bank does. There is no chance that they are going to recover this particular loans. This is the loss assets. Okay. So what are the causes of it? Causes and impacts. Causes, because willfully there are defaulting things done by the borrowers. Okay. It is a willful default done by borrowers such as banks due to certain reasons. Borrowers such as companies, firms or other kinds of entities, they willfully default the loans and they do not actually pay the interest as well. Okay. And it ultimately also means economic slowdown. Economic slowdown is also one reason which is infesting the NPA. Due to the times of, during the times of recession, depression or any kind of economic downswings, you can see that there is an economic slowdown in the economy. Okay. So economic slowdown or downswings in the economy, where you will get lesser credit, and because at that point of time nobody will be repaying the loans. Okay. Recession point of time, the production will be low, the employment will be low, so is the productivity, and ultimately revenue will always be low, and so NPA will be active in that particular scenario. Okay. So inefficient project management, we are talking on the part of individuals or businesses. Okay. So if they inefficiently manage a project, so that will also provide or garner lesser revenue, that will in turn increase the NPAs. Okay. So poor credit appraisal by banks, that is the mistake on the part of bank, will also cause NPAs to be active. And policy paralysis or regulatory delay, that will also, because if you do not regulate your borrowers or individuals financial discipline, it will ultimately become a NPA. Okay. So ultimately give chances to rise in NPAs in the economy or in the banking sector. Okay. That will ultimately impact the entire economy. Okay. So impacts, ultimately because of NPAs, ultimately it will have a bad consequence in the Indian economy or any kind of economy, probably from the sector, and ultimately leading and infesting the Indian economy. So what will it cause? It impact reduces the bank's profitability. Internal rate of return will be low because NPAs will not garner any kind of revenue. It is almost a loss asset that will not be gaining any kind of potential income. And it weakens credit availability. Because of NPAs, the trust and credit availability will be less. Trust and credit availability will be much lesser and lower, and ultimately leading to leading to an evil consequence of economy having a lower credit availability. It undermines investor confidence. If you are not trustable in terms of repaying the loans, ultimately it undermines investor confidence in your bank. If you are having that much of NPA, that will ultimately result in reducing the investment levels, and investor confidence will be hampered because of prevalence of NPA in a particular bank or a banking sector. Okay, so what happens next? Increases provision burden on banks. Okay, provisioning burden will also be increased. That will also hamper the entire banking sector. Affects GDP indirectly. See, in terms of income, of course, national income talks about the incomes earned by all sectors of the economy, but banking sector, when it has more liabilities than what it considers to have assets, then if the assets are lesser than the liabilities, definitely you are not gaining much revenue or garnering revenue that much. Ultimately it will impact the gross domestic product. Okay, so that will reduce the income levels, and governments have taken different kinds of strategies in order to reduce it. Back then in 1994, you had almost 28% of NPAs prevailing in the economy, and let's say those things were infesting the economy. But now what has happened is, in current scenario, you have an NPA of 2.8%. Okay, it is close to 2.7 to 2.8% as of 2024-25. Okay, so this has happened here. So what were the steps that were taken by government? So these are 6 important framework done by government, regulatory framework, and through law, legislative framework, and different kinds of solutions that are contrived and devised by the government. One is Insolvency and Bankruptcy Code, IBC. See, if sick patients are admitted into an hospital takes care of it because it doesn't want the patients to suffer. Likewise, IBC is like an hospital which takes care of sick companies. Okay, sick companies, whether to provide robust momentum to them, or it will actually streamline resolution process earlier, faster than any kind of other 5 solutions. Okay, so what does it do? It streamlines resolution process fast. Okay, so it will also create a committee on resolving this bankruptcy issues, and it will ultimately facilitate the liquidation process of a company, okay, in order to cover the losses by selling the assets of that particular company. Ultimately this will happen. IBC, because of IBC, there has been a faster recovery rate from NPA. So that is one thing. SURFICE is nothing but, securitization and reconstruction. Securitization and reconstruction of financial assets. What kind of assets? Financial assets of, and enforcing Security Act. It was initially implemented in 2002. So what is the role of it? It empowers banks for recovery. It empowers banks for recovery in the sense it will give a legal framework for banks to confiscate or let's say take hold of the collateral which an individual business may own. It could be personal collateral or it could be commercial collateral which a person has to owe instead of the loans which he has maintained in the form of NPA. This is what happens here. Then again, asset reconstruction companies. So these are bad loan banks. What are they called as? Sometimes they are called as bad loan banks. It will buy the bad loans and acquire the bad loans for recovery. It will buy those banks, and instead of banks recovering the loans, it will work on the behalf of banks. It will acquire the bad loans for recoveries. That is the important thing here. And public credit registry, what does it do? It actually enhances the credit information. That means it will reveal the credit and borrower's information with regards to how much he has borrowed, how much an institution or an organization has borrowed from a particular bank, what are its leverage, all those financial details related to borrower and debtor will be provided by this public credit registry. It is an initiative done by RBI. And again, there is one more initiative that is done by RBI, that is bank recapitalization plan. It empowers banks, okay, injects financial capital into banks. It makes banks financially wealthy, okay, financially wealthy. This is the ultimate aim of bank recapitalization plan. Okay, so this is what happens in NPA. So all those initiatives, reforms which were contrived by government has yielded in better results. Okay, yielded better results in reducing the NPAs from 28% to around 2.7 to 2.8%. Okay, so when it comes to net NPA, that is around 0.6%. That is the actual data, I believe. Okay, so this is an important information on NPA. Okay, thanks for listening to us, folks. Keep engaged with the channel. Okay, thank you.